Think you need thousands to start investing? Think again. Today, we're debunking that myth and showing you how to start investing with as little as $100. That's right, even small amounts can grow over time with the right approach. So, let's dive in and explore the world of microinvesting. Microinvesting is a financial revolution that democratizes wealth creation. It's the concept of harnessing the power of small, consistent investments to achieve substantial long-term growth. By chipping away at your financial goals with even the smallest amounts, you're tapping into the extraordinary potential of compound interest. This financial phenomenon, often referred to as the eighth wonder of the world, allows your money to grow exponentially over time. Imagine planting a small seed. With proper care and time, it can blossom into a magnificent tree. Microinvesting follows a similar principle. By sowing the seeds of your financial future with regular, even minuscule contributions, you're laying the groundwork for a robust investment portfolio. The beauty of microinvesting lies in its accessibility. It dismantles the myth that investing is exclusive to the wealthy. With the advent of technology, platforms have emerged that allow individuals to invest fractional shares of stocks, making it possible to own a piece of your favorite companies with as little as a few dollars. Moreover, microinvesting cultivates discipline and financial responsibility. It encourages a habit of saving and prioritizing long-term goals over immediate gratification. As you watch your investments grow, even incrementally, it fosters a sense of accomplishment and motivation to continue on your investment journey. Remember, it's not about the amount you invest initially, but the consistency and duration of your contributions that truly matter. Microinvesting is a testament to the fact that wealth creation is a marathon, not a sprint. The realm of investing has undergone a transformative shift, making it accessible to individuals with even modest capital. Fractional shares, once a privilege of institutional investors, are now within reach of everyday people. This innovative approach allows investors to purchase small portions of a single share, effectively democratizing ownership in some of the world's most renowned companies. By investing as little as a few dollars, individuals can gain exposure to the growth potential of their preferred stocks. Exchange-traded funds, ETFs, offer another compelling avenue for microinvestors. These investment vehicles provide diversification by pooling money from multiple investors to purchase a basket of securities. ETFs offer a cost-effective way to gain exposure to various asset classes, including stocks, bonds, and commodities. With ETFs, investors can benefit from professional management and reduced transaction fees. Robo-advisors have emerged as a popular choice for those seeking a hands-off approach to investing. These automated platforms utilize algorithms to create diversified portfolios tailored to individual risk tolerance and financial goals. Robo-advisors often have low minimum investment requirements, making them accessible to beginners. While they offer convenience, it's essential to understand the underlying investment strategies and fees associated with these platforms. Peer-to-peer lending presents an alternative investment opportunity. By connecting borrowers and lenders directly, these platforms facilitate loans for individuals and businesses. Investors can earn returns by providing capital to borrowers. While this option may carry higher risks compared to traditional investments, it can offer potentially higher returns. Crowdfunding has revolutionized the way individuals can participate in entrepreneurial ventures. By investing small amounts in startups or projects, investors can become part of the growth story. While this investment avenue carries inherent risks, it also presents the potential for significant returns if the venture succeeds. It's essential to remember that while these investment options offer accessibility, they also come with varying levels of risk. Diversification, thorough research, and a long-term perspective are crucial for building a successful investment portfolio. Before embarking on the exciting journey of investing, it's imperative to establish a solid financial foundation. This groundwork ensures that your investment endeavors are built upon a sturdy platform. Prioritizing debt repayment, particularly high-interest debts, is paramount. By eliminating these financial burdens, you free up more disposable income to allocate towards investments, accelerating your wealth-building journey. Creating a robust emergency fund is another cornerstone of financial stability. Life is unpredictable, and unexpected expenses can arise. An emergency fund acts as a safety net, preventing you from liquidating your investments during market downturns. It's essential to aim for an emergency fund that covers 3 to 6 months' worth of living expenses. Defining clear financial goals is crucial for staying focused and motivated. Whether it's saving for a down payment, retirement, or a child's education, having specific objectives will guide your investment strategy. Regularly reviewing and adjusting your goals ensures that your investments align with your evolving financial aspirations. Understanding your risk tolerance is essential in building a suitable investment portfolio. Assessing your comfort level with market fluctuations helps determine the appropriate asset allocation. While it's tempting to chase high returns, it's equally important to consider the potential for losses. Diversifying your investments across different asset classes can mitigate risk and enhance your portfolio's resilience. Remember, investing is a marathon, not a sprint. Patience and discipline are key to long-term success. Avoid impulsive decisions driven by market trends or fear. Stay committed to your investment plan, even during periods of market volatility. By following these principles, you'll lay a solid foundation for your financial future. Embarking on a micro-investing journey is undoubtedly an empowering step towards financial independence, but it's essential to acknowledge that challenges may arise. One common hurdle is the seemingly insignificant impact of small investments. It's crucial to remember that Rome wasn't built in a day, and financial growth is a marathon, not a sprint. Patience is key. While immediate gratification might be tempting, the true rewards of micro-investing unfold over time. Another obstacle is the ever-present threat of market volatility. Stock prices fluctuate, and economic conditions can change rapidly. It's essential to maintain a long-term perspective and avoid making impulsive decisions based on short-term market fluctuations. Diversification is a powerful tool to mitigate risk. By spreading your investments across various asset classes, you can reduce the impact of any single investment's performance. Furthermore, understanding and managing fees is crucial. While many micro-investing platforms offer low-cost options, it's essential to compare fees and choose a platform that aligns with your investment goals. Additionally, be wary of hidden charges or excessive trading fees, as these can erode your returns. Another challenge lies in staying consistent. Life can be unpredictable, and there may be times when you need to adjust your investment contributions. However, it's essential to prioritize investing and view it as a non-negotiable part of your financial plan. Automation can be a powerful tool in overcoming this challenge. By setting up automatic transfers, you can ensure consistent contributions without relying solely on willpower. Ultimately, overcoming challenges is an integral part of the investment journey. By approaching obstacles with a proactive and informed mindset, you can increase your chances of long-term success. Remember, every investment, no matter how small, is a step closer to your financial goals. Micro-investing is a powerful tool that democratizes wealth creation. It's a testament to the fact that anyone, regardless of income level, can participate in the growth of the market. By consistently investing small amounts, you're not just building a financial future, but cultivating a disciplined approach to saving and investing. Remember, it's about starting where you are with what you have. Every dollar invested is a step closer to your financial goals. While micro-investing offers immense potential, it's essential to approach it with a long-term perspective. Market fluctuations are inevitable, and short-term gains should not be the primary focus. Instead, prioritize building a diversified portfolio and staying invested through market cycles. It's also crucial to complement your investment strategy with financial education. Understanding basic investment principles, risk management, and diversification will empower you to make informed decisions. Micro-investing is not a get-rich-quick scheme. It requires patience, discipline, and consistency. However, the rewards can be substantial over time. By starting early and staying committed, you can unlock the power of compound interest and build a solid financial foundation. Remember, every investment, no matter how small, is a step towards achieving your financial dreams. So, take the leap, embrace the journey, and discover the transformative power of micro-investing. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe for more financial tips. Share your thoughts on micro-investing in the comments below. Let's inspire each other to build wealth together.